Okay, welcome to the candles webinar. So the purpose of this webinar is to cover the candle section that you can find in the price action mastery course and allow everyone to have an opportunity to maybe have some questions answered or clarify any sort of misunderstandings, or just also refresh what you already understand from the course. Also, there's a few other things I want to mention here as well. So getting started. So when we see something like this is a new candle. It's not blue because it hasn't moved up in price, and it's not red because it hasn't moved down in price. But when the life of a candle begins, it begins just like this with no bias. It's not bullish, it's not bearish, right? So let's say if this candle decides to move down something like this, then it becomes bearish, right? But if it goes back up, and ideally, when it goes back up, it's going to leave sort of this wick down here, right? Just showing us where prices already went. And then as it continues up, it changes in color, right? This is how we can identify if the candle is bullish, meaning that it's going up, or if it's bearish, meaning that it's going down, right? So that's the life of a candle. And this will continue. So for instance, this candle could actually come back down and decide to, after leaving that wick of where it already traveled, right? There would be a wick after it came back down. And it can continue to become bearish, actually. And let's say if it closed like this, then that's a bearish candle. It closed, and then maybe the next candle formed, and it decided that it was going to go up. So it formed here, and then it maybe went up to here with no bottom wick because it didn't draw down first. It just went up, right? So now let's look at the anatomy of a candle. So ideally, this is a candle, right? This is a bullish candle. And then we have our bearish candle, indicating that price is falling. So when we look at the anatomy of these candles, this is a portion of the candle. This is a portion of the candle. This is also another portion of the candle. And this is another component of the candle. Likewise for bearish, this is a portion of the candle. This is a portion of the candle. This is another portion of the candle. And this is a final component of the candle. So what are these, right? Well, this right here is the top wick. And then this right here for bullish is the close. And then also this right here is the open. And then this right here is the bottom wick. But actually, you can also say that this is the high. And likewise down here, this is the low. Now, in between the open and the close that we see here, this is also something. So what is that? between the open and the close. This is also something. We call that the body. So likewise here, this is called the top wick or the high. This is called the open because this is bearish. This is called the body. This is called the close because it's bearish. And then this is called the bottom wick or the low. So when we look at this here, you might say this candle to the left has a open that's at the bottom and a close that's at the top. Whereas this candle to the right has an open that's at the top and a close that's at the bottom. So what does that actually mean? Well, if we have an open at the bottom and a close at the top, that means that this is a bull candle. And if we have a open that's at the top with a close at the bottom, that means that this is a bear candle. So why is this even important? Why do we need to know about these candles? Because you can't trade if you don't know about the candles. All the price movement, everything that's occurring in the market is occurring according to these candles, right? This is how we can make decisions on buys or sells. So when we have a candle that is opening at the bottom like this, so it opened up here and then it closed at the top, that's a bullish candle. And it should normally be, I mean, you choose your color. It can be blue, it can be purple, it can be green. But traditionally it's usually blue for the bullish candle. And then for the bearish candle, it opened up here, it drove down and closed here, right? So the body closed down here. So the closure was below the open, that's a bearish candle. The closure was above the open, then that's a bullish candle. So the life of this candle was it opened up here, it probably drove down first, creating this bottom wick, leaving this bottom wick before driving all the way back up, creating this top wick, and then coming back down to close right here. And it's similar for this bearish candle. It opened up here, potentially drove up to leave this wick behind before driving all the way down to here to create this low, and then driving back up, leaving this wick behind and closing right here, ultimately closing as a bearish candle. So this is important because if we look at these candles, they have anatomy, right? Again, like we said, there's wicks, there's bodies, there's opens, there's closures. So 86% of all candles have a bottom wick and a top wick, right? When we talk about these candles and we're looking at these candles and observing their movements in the market, we should always expect to have a bottom wick, a top wick, and then the body. It's almost sort of like abnormal if the candle does not have both of these. It's common to see a candle without a bottom wick, without a top wick, but the majority of candles have a top wick and a bottom wick. And this is vital to know in your trading because, again, we said in order to understand the markets and read price, we have to be able to read candles. So always remember that 80%, 86% of all candles have a top wick and a bottom wick. So let's take a look and see how accurate that is just for a moment. We look at this chart here. This is gold USD. Let's just take a look here, just on what's on the screen, right? starting from here. This candle has a top wick and a bottom wick. This candle has a top wick and a bottom wick, top wick, bottom wick, top wick, bottom wick, top wick, bottom wick. This one has a small top wick and a bottom wick, top wick, bottom wick, top wick, no bottom wick. So that's one out of the majority. Top, bottom. It has a small nudge at the top and the bottom. No bottom, no bottom, right? No bottom. These three has no bottom. But as you can see, the next following that, top, bottom, top, bottom, top, no bottom, top, bottom, right? So as we know, and we just saw that the majority of these candles have top and bottom wicks. So like I was stating earlier, the norm of a candle is a top and bottom wick. So we should always expect that a candle will produce that. And that's going to be vital for us to have accurate trades and make sound and reasonable decisions in the market when trading. Okay, so moving forward. Now, one day, so the life of a candle, as we know, is made up by its time frame, right? So 5 minute is going to produce a candle that has a lifespan of 5 minutes, right? Uh, 15 minute, again, lifespan of 15 minutes. That means that if we're looking at a 5 minute time frame, every candle is going to exist for 5 minutes, meaning that it's going to open up and then within 5 minutes, it's going to close. And then the next candle takes on life, right? So it's the same. It can be 30 minutes. It can be 1 hour. It can be 4 hour, and you name it, right? It can be daily, meaning that that candle is taking 24 hours to close. So in the day, in one day, we have 6 4-hour candles. These 6 4-hour candles make up one day. 6 4-hour candles make up one day. So let's take a look at that, because when we're talking about making sound trading decisions, it's contingent upon volume. This is very, very important. So let's say we have a 4-hour candle here. We have a 4-hour candle here. And then that's the entire day, right? So this first one is going to begin around 5 p.m., right? The second one is going to be around 9 p.m. If we're talking about Eastern Standard Time, keep in mind, we should always be looking at the charts and focusing on the charts at according to New York time frame, because it's the largest financial market in the world. And price and trading is all based on time and events, but time, right? So this first one is probably going to be like around 5 p.m. That is New York. The second one is going to be like around 9 p.m. This third one is going to be around 1 a.m. all New York timeframes, right? This is what we're focusing on. So this fourth one here is going to be around 5 a.m. You have another one here that's going to be around 9 a.m. And then you have another one here that's going to be around 1 p.m. Right? And that's going to make up the whole 24 hours. On the charts. Now, so when we talk about these 4-hour candles, there's only a few of them that has the greatest volume. That's going to be this one here, because this is going to be around London session. That's going to also be this one here. So this is pre-London. So you got volume kicking in. It's going to be this one here, which is already inside of London session. And you're looking at pre-New York. You're going to have this one here, which is already inside of New York Stock Exchange, is already open, as well as the New York Forex market, right? The USD Forex market is already open. So you're going to have these three major opportunities to take trades. That's a 12-hour window, 4, 8, 12. They're going to present the greatest volume. And we just want to catch a portion of that 4-hour candle. 10, 15, 20, 25, 30 pips. And that's why this strategy is just so simple and easy to learn and replicate for consistent profits. So we're just aiming for a piece of these 4-hour candles within this window of 1 a.m. to 9 a.m., which includes London. It's going to be actually pre-London, London open in session, pre-New York, New York open in session. So literally just this time frame, right? Because again, time is important. Even when we're looking at price, it's based on time. Each candle is forming based on time. So it becomes quite simple. Now let's look at these 4-hour candles, right? How do we actually read these candles? So let's say we have a 4-hour candle that maybe looks something like this. Created this sort of little top wick and this long bottom wick, right? Bearish candle. So we already know that if you have this type of candle, that means that the open was right here, right? That means the high was right here. The low was right here. And the closure was right here, right? The high, the open, the close, and the low. So what occurred here? This is the 4-hour. And we know that it is bearish, correct? And that's just by looking at the, what do you call it? The color. So how do we read this on the 1-hour structure? It might be something like this. let's take a look here. We had a 1 hour candle that may have did something like this, right? So this is our first 1 hour candle, because we know that there's 4 1 hour candles and a 4 hour, right? So we had a 1 hour candle that did something like this, right? We may have had a bearish candle that did something like this, coming all the way down to create this low, right? We may have had another bullish candle that did something like this, potentially. And then we may have had another bearish candle that did something like this. And let's say that maybe it created a top wick before driving down to here. Potentially a bottom wick also. And this would be our four 1H candles that make up the 4 hour candle, 4H candle. So now what do we have going on here? So this is our 4 hour candle, right? This is anatomy. We made this high up here. It had an open right here. It came all the way down to create this low and then came right back up here to make this closure here, right? On the 4 hour candle. So now if we're looking at the 1 hour candles that make up this 4 hour candle, you got each candle that has a life of 1 hour. So it probably had our 1 hour candle that opened up like this and closed right here, creating this top wick right here. Then you had maybe our next candle coming all the way down to create this low right here. Then we had a bullish candle coming back up to here, maybe creating this wick right here, but closing right above here. And then you had this last 1 hour candle bearish that was able to create a little top wick, come down, create another bottom wick, but close right here, creating this closure for the 4 hour candle, right? So again, we got to be able to read these candles in order to know where price is going to be going and to make sound trading decisions. And then it's very vital because we're going to be breaking down our analysis from a higher time frame to a lower time frame. We want to be able to see maybe where price is struggling. Maybe we see that on the 1 hour, looking at additional 1 hour candles, price may have created sort of like, I don't know, maybe a resistance, right? Maybe we had a resistance now on a 1 hour time frame that was like right here, maybe. So that's important to know, because if we're bearish on the 4 hour and we're creating this resistance right here, that means that the next candle could potentially open up right here, right? Create this top wick, respecting that resistance. And then as it comes down to break these lows right here, we can look to enter that trade to fill the range all the way down to here, where we have what's right down here. We have this support right down here. And let's say that was, this is a 4-hour candle. So let's say that was maybe a 25 or a 30 pip range. So you start to be able to read price and understand what price is trying to do and what moves it's trying to make when we are able to truly read the candles, right? You got this 25 to 30 pip range right here. And that would have been a beautiful trade for us, right? So that's why it's very important that we understand how to read these candles as well as understand the anatomy. So when we look again over here, we see that this is the high of our candle. This right here is the open. This right here is our close. And then this right here is our low. And as we get into the range section and learn more about support and resistance, we'll start to understand like why this is important to know that this is the body of the candle. And price is actually respecting. When we talk about respecting to create a resistance, if you look right here, this resistance was formed at the body closure, right? Here at the support was formed at the body closure. So this is very important in regards to understanding these candles. So let's move forward and let's look at another topic when we talk about candles, right? I'll give you another example with a 4-hour candle. So actually, before we talk about 4-hour candles specifically, let's talk about this idea of when candles are closing or opening with wicks, right? So candle wicks. So when we have a candle, let's say it's a bullish candle. Let's say it opened up like this, created a bottom wick when it opened, and it closed with no top wick. And let's say likewise, we had a bullish candle that went up, has a top wick, but has no bottom wick, right? So let's just let's do the bearish example as well. You got a bearish candle, it's closing, no bottom wick, but it did form a top wick. And then likewise, you have a bearish candle that's closing. It has a bottom wick, but no top wick, right? Let's just mark these candles up real quick. Here, no top wick. Here, no bottom wick. Here, no bottom wick. And here, no top wick, right? These ones are actually the same. So we'll just put this one here. Sweet. Both of these have no bottom wick, right? All right, cool. So what does that actually mean, right? If you see a candle is closing, but it has no top wick, that generally means that price has no further range to continue driving up. Selling pressure is strong, and most likely price will not continue up. There are rare cases where there's just so much volume in the market. There was no opportunity for price to create a top wick, but generally in those cases, we don't want to be in that. It's probably news, or it might have been something. It's abnormal, right? We already identified that majority of all candles have a top and bottom wick, right? So also, let's say that this candle opened up, right? We know the anatomy of a bullish candle is that the open is at the bottom, the closure is at the top. So it opened up here, drove up, rejected, creating this top wick, leaving this top wick behind, and closed right here. No bottom wick. What that usually means is that since we know that majority of all candles has a top and bottom wick. That potentially means that price will come back down. Maybe on the next one, let's say this is 30-minute time frame. So the next 30-minute candle might come back down to create that bottom wick. We want to be very careful, very, very careful when it comes to these candles that don't have a top or bottom wick. Likewise, this is bearish, right? Price opens up here, closed down here. When it opened, created this top wick and then drove down and closed right here with no bottom wick. Generally, it means price has no range to continue driving down. And likewise, price opened up right here, but didn't create a top wick first like it did here. It just opened up and then shot down, then drove back up and closed here. Let's say it's a 30-minute candle. That means potentially the next candle could drive back up to create that top wick, maybe on the hourly time frame, right? So let's just look at this a little bit further, right? If we say that we have a, what do you call it? Let's say we have a 4-hour candle, right? Let's say it's bullish. And so our 4-hour candle, draw. Our 4-hour candle is bullish, right? It created a top wick and created a small bottom wick, but nonetheless, there's a bottom wick, right? This is a 4-hour candle, as we mentioned. So it's our 4-hour candle. Has a top wick. It has a bottom wick. Let's make it look a little bit better. Cool. Anyway, so how does this translate? If there's a wick right here, that means that there's still range to drive up. So like, let's say we have a resistance. This is represented as a resistance right here now, right? And then down here, this is represented as a support. So if we look at the 1-hour candles that can make up this 4-hour candle, it looks something like this. We had price drive up. Where are we drawn to? We had price drive up, right? Let's say price opened up right here. Let's actually say, instead of price driving up, let's say the 1-hour candle, the first 1-hour candle, maybe it drove down, right? And created this, it drove up a little bit first, but it drove down, right? And closed below this support. But the next 1-hour candle actually drove up, breaking the high of the previous candle. Let's say it drove up to here, right? Leaving this wick down here. And then the candle after that, let's say it drove up to here, right? This is our third candle, forming this bottom wick here, right? And then the 4th candle drove back down into the range. It closed into the range, right? So these are 1-hour candles, right? Now, why is this even important to note? So this is our 4-hour candle here. right? It sort of have this on the 1 hour, created this support. On the 1 hour, created this resistance. It left this wick up here, but it didn't close above, right? So that translated to the 4 hour candles as this scenario, right? Price came back down and closed into this range, right? But on the 4 hour, it left this wick up here. So that means that left the opportunity for the next 4 hour to actually fill that wick, right? It may look like something like this for the next 4 hour to fill. And let's say the next 1 hour is doing something like this. The next 1 hour creates this bottom wick first, right? Creates this bottom wick right here. And then drives up, breaking the high of this wick right here, which is also a resistance. And let's say it closes like that, right? That means that the next 4 hour did something just like this. That means the next 4 hour created this bottom wick here, and then it drove up. So the point is, when we have these top wicks, right? That means that there's more range for price to drive. But when we have a candle, maybe bullish, that close with no top wick, like this one here, and like this one here, and this one here, it essentially means that there's no range for price to continue driving. And the selling pressure, in this case, for bullish is just way too strong. And we can't really find any opportunities to continue moving up in the market. All right, so just to reiterate, looking at the chart again, since we're covering that wicks, we're covering those wicks. You see, as we discussed earlier, the majority of these candles have a top and bottom wick, right? The majority of all these candles have a top and bottom wick. This is prices ranging here, but majority of all these candles have a top and bottom wick. So that's the point we're looking to make when we talk about candles with wicks and candles with no wicks. The anatomy of a candle, the natural anatomy of a candle is that it's going to have a top and bottom wick. If you witness anything different, then it's not the norm. So actually that wraps up the candles webinar. This is recorded. I'm going to see how I want to deliver it to the mentee so you can come back to it. But again, we cover this in the full price action course. This really is just an opportunity to refresh and then answer any questions that you guys may have. So if you have any questions, feel free to let me know now, then maybe I can answer those questions. Any questions from anyone?
No, I'm good, bro. No, thanks, man.
Okay, awesome. If there's no questions, then wait, let's see. Sorry, 1 second. Thank you. Ade, I really appreciate it. Thank you for joining us today. If you have questions later also, feel free to message in the Telegram group or in the email, whichever is easier. And that way I can respond and answer those questions as well, or I can answer them during our next session. Tomorrow, we're going to have a live simulation, which is sometimes called back testing, but we'll be using a Forex simulator to trade the markets live. So it's kind of a bit different from back testing, but I think most people are familiar with the term back testing. So tomorrow we'll be having that around the same time. If it's more convenient that maybe we start that at 2 p.m. UTC. So 1 hour later than we did today for most people, then I'm open to that idea as well. But otherwise, if there's no more questions, I'll try to see how I can provide the recorded version of this session as well. Otherwise, I'll see you guys tomorrow.
All right, bro. I'll see you tomorrow, man.
All right. Thank you for joining us today. I'll see you guys all tomorrow. Yeah. Cheers.